Hey, this is Sean with Price and Price Realtors, and today we are going to analyze a property over in Alexandria. Here on the right, you'll see that I have the MLS listing pulled up. I'm going to use this for speed of the process. There are resources that you can use without having access to the MLS to do these analysis, and I will mention those as we're going through the process. On the left here, you'll see the spreadsheet that we use to analyze this, and allows me to go in and look at a property and see what the return on the investment would be pretty quickly. So, so here we go. All right, so if you're doing this yourself, you probably want to put the property address up here just for your records. Purchase date, don't worry about that right now. So sales price for this property, I always analyze it at the asking price, especially in this market, because a lot of times you're going to pay at ask or above. So once you put the asking price in, then the spreadsheet automatically calculates a 20% down payment, and it also automatically calculates estimated closing costs because you want to have these numbers in the calculation for your return on investment. Initial repairs needed. Most properties need at least about $5,000. It's just a good padding to put in there. If you look at the pictures for this property, it looks like it's been updated, so it may not need that much. I do know about this property that this air conditioning unit does not work, so that does need to be replaced. And then, let's see, there was AC unit. Oh, the electrical panel. You can't see it in these pictures, but the electrical panel, this carpet actually looks a lot better in person. There's an electrical panel that is above the refrigerator that is not to code. That may eventually need to be replaced. So that's why we put the $5,000 in for this unit, but it's in pretty good condition, to be honest with you. Okay, so association dues. When we go down here, now this is one of the challenges. A lot of times I recommend to investors that, especially if they don't have access to MLS, that they use Zillow for a lot of this information. On Zillow, what we're finding is that Zillow has a space for HOA fees, but condo fees don't translate to that. So a lot of times people will be looking at condos and they'll see that the HOA fees are zero and won't realize that there's actually a fee here. So the condo fee here is $399.39 a month. So I'm calculating that, multiply that times 12 months. So the total condo fees or association dues are $4,792.68. Finance rate is, right now, our interest rates are so low, it's crazy, but I'm put in 3% just because it is an investment property. Probably going to be a little bit below that, but I like to put in 3% just for a little bit of padding. Total assessed value. So go to the tax ID over here on the MLS. Now, if you don't have access to the MLS, number one, I could do the analysis for you, but if not, you can always go to whatever county this is in. For example, this is Alexandria City, Virginia. So you would go to the Alexandria City property appraiser website and you would be able to pull this tax information. But on the MLS, we have access to it. So we can see that the total land assessment is, let's see, total land assessed value is $85,183. And then the total assessed value is, which is right over here, it's going to be $247,808. When I put those numbers in, that gives us a land cost percentage, and that is used for calculation of depreciation, which is one of the benefits to buy and hold real estate investing. Okay, real estate taxes. This is for 2020. It looks like the total taxes are $2,800 for the year, so we want to calculate that in. And then monthly rent. So I ran the rent analysis on this before we got on, and the average rental rate for a one-bedroom, one-bath in this complex is actually around $1,850. But this unit is currently on the market and it's down to about $1,600. I don't know what's going on with that aspect of it. So I'm going to go in here and I'm going to put $1,600 on this, just for, again, I want to be conservative in the numbers that I'm putting on here so that we know that we're protecting the investment. Vacancy will automatically be calculated on the next page, and that's usually about 1 month vacancy. You want to have 1 month vacancy. I like to put 10% as a vacancy rate. And then insurance. So Zillow usually has an insurance estimate on this, but when I look this property up on Zillow, well, it's not on there now, but when I looked this property up on Zillow, it only showed the rental listing. So it didn't have the insurance information. So I'm going to put about $100 here, or I'm sorry, $1,200 a month. I think that's a little bit high, but again, just to be conservative. All right, so these are our numbers that we're putting in. So then I click over here. And what this is going to do is this is going to actually give us our analysis. So let's see, you can see up here, I'll go ahead and maximize this. You can see up here that we have our purchase cost $279.9, cash invested. This is closing cost plus repairs plus down payment needed. I'm sorry, that's just down payment needed and any repairs, and then closing cost is calculated right here. So the spreadsheet goes through and it will actually calculate out what your principal and interest payments are for the year and so on. In this example, annual principal was $46.65 or $46.75. Annual interest was $6,653. On this tab down here, we actually have the amortization schedule. Okay, back over here. All right, so let's see. So total depreciation for this property is going to be $6,678. I'll show you how that calculates in later. Our annual rent is $1,920. Vacancy for 1 month's rent is $1,600. So gross operating income for this property is $17,600. That means that's the estimate on what we should bring in total with all rents collected. Now we get into our operating expenses. Real estate taxes are $2,800. Repairs. So I build in a natural 10% when I'm analyzing a property for myself. I build in a natural 10% for what we call CapEx savings. So you want to have this money set aside just in case you need to repair something on the property. The good thing about this property is there's no HVAC system, there's no water heater, and the roof is maintained by the association. So the only major repairs that you might deal with on this property would be if the windows or doors need to be replaced. So I would put that in there and put the savings in there, but for a lot of investors, they don't worry about that, so I'm going to put that at 0. Association dues, we do need to have that into our calculation. Any property that I'm going to personally invest in, or that Kelly and I are going to invest in, we want to have property management. So I put in an automatic 12% for property management. And that covers tenant acquisition costs, that covers monthly costs, and so on. Again, this is a little bit high. It's a padded number. A lot of our investors here in Northern Virginia, they self-manage. So I take that out for our investors. And then insurance, that's a rough estimation of $1,200. So total operating expenses are $8,792.68. Okay, so now we get into the benefits of investing. First benefit, and this is where your personal goals, your personal investing goals are so important. So this is how you analyze and say, yes, this is good for me, or no, it's not. So first is cash flow. So the annual cash flow before tax on this property, that's taking the gross operating income minus the operating expenses, and then also minus the annual payments. Okay, so the cash flow on this property would actually be a negative $2,521.35. So if you're an investor who's looking to build cash flow, you immediately right there can stop. You know this is not a good investment for you. If, however, you're someone who is cash flow is not important to you, you're more banking on appreciation and asset value, then you might want to keep on looking. So principal reduction. So we talked about up here that the annual principal is $4,675. So that is what the tenants will be paying as far as paying off on your loan. So that's actually an increase in equity that will be happening. So this is one of the benefits of cash or of buy and hold investing, because you're not going to be making these payments. The tenant will be. Down here, we talk about depreciation. Of course, you have to talk to your accountant about this, but most of our investors are typically around a 35% tax bracket. So the total taxes saved on this is about $1,583.80. So again, you get with your accountant, make sure that depreciation will work for you. But if you are allowed to depreciate, you would actually save this much on taxes. So that's another benefit. And then lastly, appreciation. So as you know, here in Virginia, appreciation is crazy. It was 8.6% nationwide in 2020. Northern Virginia was actually a little bit higher. But I like to be really conservative on appreciation because that is gambling. We don't have any control over that. So I put 2%. So appreciation would be about 2%, so about $5,500. So these are the benefits that you get. So you look through these and kind of get a rough idea. Again, the main thing to look at here is cash flow, because if you are a cash flow investor, this property would not work for you. But when we scroll down here and we look at, okay, so what are the rates of return? So this first number here, the rate of return is, it's the return on your investment, which is your total cash invested, which is up here. It's these two numbers right here. It's that amount invested divided by your total benefits, including appreciation. So your return on your investment would be 12% when you include appreciation on this. So if you take that and you compare that to, current savings accounts or current bonds, so you're 1%, less than 1% on those. So this is a huge return with your appreciation. So me personally, that's a great number to see. But again, I don't like to look at appreciation because that's gambling. That's something that we don't control. So I like to look at the number without appreciation. Without appreciation, you're still at 4.8%. So that's not a bad investment when you compare it to the stock market. And then you go down here, capitalization rate. This is a number which I'll cover in another video. This is basically what the investment value is if you paid cash on it. So 3.14. Cap rates are location dependent. For example, down in Florida, when I'm analyzing down there, I'm looking for an 8 to 10% cap rate. Here in Virginia, 3 to 5% is actually a pretty good return. So, just depending on your goals, that could be a good return. And then cash on cash is negative 3.24%, and that's because the cash flow was negative on this property. So looking at these numbers here is how you determine, is this a good investment for you? Okay, I hope this makes sense. I do want to go through and look at this as if it was a cash investment. So I go back over here, and instead of putting down that down payment, I'm going to put down the full amount in cash. Okay, closing costs don't change. Total cash invested. Okay, so $279.9, and then we have same closing costs, and then we also have initial repairs needed at $5,000. So this would be the total cash invested in this property. So if I come over here and look at these numbers again, now we're cash flowing $8,800 a month because of the rents that are being brought in. We don't have annual debt service because that's not there. We're actually going to end up paying some taxes because we're not losing money on this when you bring in depreciation. So we're actually going to be paying about $744 in taxes, which is not bad. That's less than 10% on that investment. You got this much income and you're only paying $744. That's a lot less than 35%, that's for sure. Appreciation is still the same. So now we look at your return on investment, because you have so much cash in it, is going to be 4.5%. Your return on investment without appreciation is going to be 2.6%. Your cap rate is going to be 3.147, same amount. Cash on cash is going to be 2.9%. So again, depending on your investment goals, risk tolerance, and so on, do you want to finance this, or do you want to pay cash for it? Those are choices that you have to determine based on what your goals are. Okay, I hope this makes sense. If you have any questions, please feel free to reach out, and I'll see you on the next video.